Welcome to the new episode of the Learn and Trade with the Popeye series. Today I wanted to show you how I use a very simple and effective tool that is the Fibonacci Retracement. The tools can be very complex, but I use it in a very simple way, so pretty easy for you to integrate it on your trading strategy as a confluence on levels. I show you how I use it to find entries for trades, and I also show you, since it's very relevant with the current market condition, how I use it to set take profit levels in price discovery whenever you don't have anymore any resistance to choose your potential targets for your trades. I try to keep the video short and straightforward because I think you have to keep it as simple as possible to master it properly. Before moving to the chart, make sure to subscribe to the channel, leave a comment and a like so I know you enjoy this content and I will try to drop as much as possible. Also, a big shout out to Zoomex for sponsoring my YouTube page. Zoomex is a very cool non-KYC exchange. You can join Zoomex with my referral link in the description below the video to enjoy a 20% discount on trading fees and also to be eligible to participate to the very frequent campaign we run with the Zoomex team. But without further ado, let's move to the chart and see how to set and to use the Fibonacci Retracement tool. First of all, the tool is integrated in TradingView and also in most of the trading platform. In TradingView, you can find it here on the right column, and this Fibonacci Retracement. Once you open it, you can see the setting that I'm using and are very simple. You can save them here, but I usually keep flagged the 0 level and the 1 level that you will see are the most important to set your boundaries. Then I keep the golden pocket at 0.65 and 0.618, and then I use one of my favorite, the 0.75. Whenever you want to use it for price discovery, then you can use 1.618, 2.618, and 3.618. For the moment, I will unflag them just to you to show the first part. You can choose the color and all these setting as you want, but this is my standard setting. So the first concept you have to understand that is called retracement for a reason, because it's helpful to calculate potential retracement of an uptrend or a downtrend. So what does it mean, retracement? That the price is moving higher. We see that this is an uptrend. We want to catch after this high a retracement, and the Fibonacci tools will help us to find the juicy spot on this retracement, potentially to long the next leg up. The same for downtrend, where the Fibonacci retracement will help us to understand the retracement of this lower high and lower low series to find here a juicy spot with the Fibonacci retracement to short the next leg down. So the first concept you have to understand, and the first mistake that I usually see, is that people use the Fibonacci, they draw the Fibonacci bullishly on a downtrend, or they draw the Fibonacci bearishly on an uptrend. So what does it mean? The Fibonacci simply works in this way. You see an uptrend, so you want to set your level to catch this move here. So as you can see, in a bullish move, I set the 1 level on the lower higher low, that is this one, and I set the 0 level on the higher high. Why? Because I want to understand where the retracement could happen and where I would be interested to long it. And as you can see here, this bullish Fibonacci retracement is giving me this golden pocket and the 0.75 level at this level here. What is meaning? Meaning simply that this is the 0.75, so the 3/4 of this move. So if this move was $1, this is giving me a 0.75 drop, to make it super simple. As you can see, if I put 0.70, 0.25 and 0.5 is giving me the 3 quarters. So it's something extremely stupid and extremely simple. So just understand that is a simple calculation that if this move 10, here is giving you, is moving 1, here is giving you the 0.75. So why these levels are interested? Are interested for two reasons. Mainly because algos, other traders use it, so they can potentially provide a good bounce. But second, because on this move, you know that you are longing in a place where the risk reward is very favorable, because you know that you are very close, 0.75% close to the last low, and this low would be your invalidation. So if you enter here, your invalidation is not that far, and you will get a very good risk reward. If you long this somewhere here at 0.75 or 0.25, your risk reward is messing up, because your trade would look something like this. I don't know. So you will get a very bad risk reward. So the Fibonacci helps you to understand and see where is the juicy spot for a continuation trade that gives you a very juicy risk reward for your trade. So it's super straightforward. What is the common mistake that many people are doing is to use on a bullish move, for example, a bearish fibs, that in this case would be this. So instead of looking for the bullish move, they look for the bearish move, they draw the Fibonacci like this, and they try to short this. It's something that you can do, it's something that I do also sometimes, but you have to understand that you are doing a counter-trending selection of the Fibonacci. The correct way of using a bearish Fibonacci is in a bearish move. So in this case, where you can see that you select this like this, and you look for a bearish move. So awareness of what you do. You use the Fibonacci, so the 0 and the 1 are inverted comparing to this. I leave you here so you see the difference. Sorry. As you can see, this is a bullish retracement, 1 to 0. This is a bearish retracement, 1 to 0 on the opposite side. So in the first side, 1 is down, 0 is up. In the second kind, 1 is up, 0 is down. If you want to make it more simple, you can simply put the 0.25 and you will get the opposite of 0.75. But I always use just the 0.75. I just pay attention to do it in the right way. You can do the counter trading, you can do the inverse that I was saying, looking like this, but make sure to be aware that you are counter trading a bullish trend. So more easy, more frequent to be stopped out. So if we see on the chart, like, not sure where I can find one on Bitcoin, but if we take, I don't know, this move up to here, so this is the move. You see, this was the bullish move that we get in Bitcoin, and the drop came exactly on the golden pocket, and then we move higher. Now, if this is really the high, for example, on Bitcoin, you can do something opposite. This to this. What is the discretionary part of this? That you can also, if you are extremely bullish, your bias is very bullish, you can also do this and take this leg here to this high here. So the textbook application is the last lower low and the following higher high. But also this is a low and also this is a high. And you can do it if price is fractal in every time frame. So potentially you can also trade. If you that the one I showed you before was the 1 hour, the 1 day, the 1 hour, you can do something like this, or you can also do something like this. This is not something I can teach you how to do it. It really depends on the sort of price action that you want to follow, the time frame, and so on. What is important to keep in mind that it doesn't work on sideways price action, as you've seen here. Price start to go sideways. Here we do not have anymore, at least in this time frame, a structure. So here it becomes pretty useless. You can check the video on order block. What I usually do is that I combine the Fibonacci tools. Sorry. With order block or demand and supply. So if the price move like this, one of my standard trade that I do is that I look for some sort of order block or demand forming here. You can find here in the Learn and Trade with Popeye series the explanation of this. We make a confluence of this leg with the Fibonacci tools, and in case the demand order block is confluent with a Fibonacci level, you do have a further confluence on your entry. The stop loss is simply below structure, so below, very close below to the last low. In case this low is lost, we lost also the structure, so the thesis of the uptrend is invalidated, and target is above the last IRI. So super simple and super effective. The other way that I use it is again pretty simple, and is mainly to be used when price is moving in price discovery. And why it's useful? Because once you are in price discovery, you do not have resistance level to base your trade. How you do? You look for the last consolidation before the break in price discovery. You set 1.618, 2.618, 3.618, and you take the consolidation. Like this is the consolidation that gave you the break into price discovery. So you take the last high, the last low of this consolidation, and then you draw the level. As you can see, Bitcoin in the first break we had here at 1618 found their resistance and was rejected, so was a valid point, and now potentially we move to the next level to 261.18. So super simple. And why is used? Because there is no resistance, so retracement are used by algos and by many people that potentially use this system, this tool, and they take profit at this level, and you can see is dropping. If you try with a chart with a more history, you will see that in the next cycle Bitcoin topped, if you want to practice, at 3.618. It finds some local resistance at 26.18, at 1.618, but finally topped here, if you will use older chart, at 3.618. So again, in this cycle, once we reach here, we took some profit. Now that this is broken, this is the next target that we can aim at. Do the same for your favorite coin. Whenever there is a breakout, this is the system I personally use for trading into price discovery. Whenever you would use the Fibonacci extension, the retracement on your trade, and you find setup, make sure to do it with me in ZoomX. You will find the referral link in the description below. ZoomX is a super cool exchange, non-KYC. You will enjoy the 20% discount on trading fees using my referral link, and you will also be eligible to participate in some very cool campaign giveaways like the one I'm running now for the user that are using my referral link. We give trading bonus and we do trading competition, so a lot of tools that will help you to boost your trading experience. As always, if you have any doubts on the Fibonacci retracement tools, how to use it, if you want to send me some chart, if you have any question, make sure to drop me a comment here or on X. I'll try to help you and to support you as much as possible. As you know, all the content I provide is free, so make sure to show some love to this video, drop a comment and a like before leaving, and make sure to subscribe. I think is everything for the Fibonacci tools. As I said, just to keep it as a summary, make sure to understand how to use it. Use the bullish retracement on the bullish trend. Use the bearish retracement on the bearish trend. So to follow the context and to ride the trends. Make sure you choose how to select the high and the low, or the low and the high properly according to your bias. And should we go in price discovery, select the consolidation with the 1 and the 0 and use the 1.618, 2.618 and 3.618 as potential target for your trade once there is no resistance and your beloved coin is trading on the blue sky of price discovery. Is everything for this video. As always, take care of there, stay safe, and we'll see you in the next one. Bye.